telecoms companies with landlines and so forth were threatened by the advent of the internet. In that sense, the digital currencies may be the biggest shakeup in banking in 300 years.
Welcome to another Breakout with Breaking Views, brought to you by PGIM. I'm here with Edward Chancellor, who's written a fascinating column about CBDCs. That is not some sort of hemp-derived oil. It is not a downtown club in New York City. Eddie, explain to me what a CBDC is.
CBDC is the central bank's answer to a stable coin, the central bank's answer to cryptocurrencies, namely a new electronic digital currency.
And why are they putting out? Is this their response to the Bitcoins and Ethereums? Is this because they feel under threat in some way from cryptos?
Well, yes, but I think general point is that digital currencies are following the digital economy and people giving up on cash. In Sweden, half of retailers no longer accept cash at all. So as you get rid of cash, the central bank's saying, well, we need our paper notes are no longer in circulation. We need our own currency out there.
Who is this going to hurt? If central banks, if the Federal Reserve, if the European Central Bank, the Bank of Japan, they come out with these digital monies, is it all good, or is this, I mean, your piece suggests that commercial banking as we know it is doomed.
Yeah, well, I mean, think of it this way. We all have a bit of cash in our wallet, but not that much. Most of our deposits, most of our cash, in inverted commas, is kept in a bank. Now, with the central bank offering, if there are no limits on holding, and as it's much safer than putting your money in a bank, then the possibility is there's a huge transfer of savings of deposits out of the banks into the new digital currency. And that creates a problem for a commercial bank. It's not clear to me what a commercial bank, what function of the commercial bank is going forward. In the same way that, say, telecoms companies with landlines and so forth were threatened by the advent of the internet. In that sense, the digital currencies may be the biggest shakeup in banking in 300 years.
Okay, but there are other elements to this. I mean, if central banks can sort of monitor and trace where this money goes, there's security issues, there's privacy issues. Doesn't that sort of go against the whole notion of a cryptocurrency?
Well, it goes against the notion of cryptocurrencies, and one should bear in mind that the digital currencies are not necessarily distributed ledger technology like Bitcoin. They may be centralized, and depending on which country you're living in, the central bank or the intelligence or agencies may be looking in on all your transactions, and that appears to be the case in China. Now, China's quite far advanced with its trials of the digital currency. It's the digital yuan. It's said that next year at the Beijing Winter Olympics, that the sports people who are arriving there will be given digital yuan to spend. Now, the People's Bank of China and the Chinese intelligence agencies have the capacity to read all those transactions. Now, the Americans are not happy with that, and they're going to have to find a different type of system. But on the other hand, they don't want undesirables transferring large sums of money around the world to fund terrorism or drug dealing or so on. And the Americans have yet to come up with a solution for that.
So, I mean, digital yuan, in a sense, is a huge threat, I suppose, to the hegemony of the US dollar long term.
Well, I think so. I mean, so you have to think of it as that we're moving from one platform for financial transactions, which is international, which is banks and bank transfers over the SWIFT settlement system. Now, that is really under the domination of the Americans. The Americans can impose sanctions on Chinese officials or on North Koreans or whoever they wish by dominating the system. Now, the Chinese dislike the hegemony of the US dollar and want their own system. So they, with their digital yuan, they're looking to sort of insert themselves into a new international monetary system, and they want to dominate that system, which is another reason why the Americans have got to get cracking and come up with a viable alternative.
And as far as if you're a stock market investor, okay, how do you think about? Do you think this is a reason to underweight commercial banks? Is this a reason to avoid Visa, MasterCard, and payments companies?
Well, I mean, it takes a while for the market to wake up to these possibilities. But yes, there is a potential for the digital currencies to undermine the franchises of JP Morgan Chase, to undermine the franchises of the credit card network, so Visa International and MasterCard. I'm not saying tomorrow or even next year, but in the 5-10 years time, what will those business franchises look like? Will you need huge banks with vast numbers of staff and countless numbers of regulators and compliance officers? I think probably not. So this, if you will, accelerates the sort of the fintech threat to commercial banking, and I think that will probably make the more prudent investor consider that we'll be considering that threat and marking down the valuation of those stocks, if not today, but certainly in the next few years.
All right, fascinating discussion. Thank you, Eddie. We'll be back with another breakout from Breaking Views next week.